Breaking news: the UK government has just confirmed a significant change in the rules that will affect millions of pensioners across the country, and it's something every retiree and taxpayer needs to know right now. Revenue and Customs, HMRC, is set to automatically deduct up to £200 from the bank accounts of certain state pensioners, a move that's directly tied to the revised winter fuel payment system for 2025-2026. For many, this will come as an unwelcome surprise. So, what exactly is happening, who will be impacted, and what can you do to avoid unexpected deductions? Let's break it all down. As part of the government's plan to provide targeted support during the winter months, the Winter Fuel Payment Scheme has been overhauled for the upcoming financial year. This initiative, which is designed to help older citizens manage rising energy bills during the colder months, will still go ahead, but not in the way people might expect. Under the new system, every eligible pensioner will initially receive the payment up to £200 for those under 80, and up to £300 for those over 80. However, here's the twist: not all recipients will be allowed to keep that money. The government has set a new income threshold of £35,000. If your total income for tax purposes is under this limit, you're in the clear. You'll receive the full winter fuel payment, and you won't be required to repay a penny. But if your income is above £35,000, HMRC will claw that payment back, and they'll do it automatically. This means that while the payment will still land in your account as usual, it will be reclaimed through the tax system shortly after, depending on your tax setup. Specifically, for pensioners whose taxes are handled through Pay or Pay as you earn, HMRC will simply adjust your tax code in the following tax year, 2026-2027, to recover the amount you weren't technically entitled to. For those who submit a self-assessment tax return, the repayment will be calculated and added to your 2025-2026 return. In other words, the government is effectively giving with one hand and taking away with the other unless you take action. Now here's where things get especially important. Pensioners who know that their income exceeds the £35,000 threshold have the option to opt out of receiving the winter fuel payment altogether. This prevents the automatic repayment process from kicking in, saving you the hassle of having to deal with surprise deductions later. However, you need to act quickly. The deadline to opt out is Monday, September 15, 2025. That's just weeks away, and missing this date could mean facing an unexpected tax adjustment next year. Catherine Ford, the Technical Manager for Tax at the Institute of Chartered Accountants in England and Wales, ICU, has emphasized the importance of acting promptly. She explained that pensioners need to contact HMRC before the September deadline if they expect their income to be above the £35,000 mark. Thankfully, HMRC has set up an online tool that helps you calculate whether your total taxable income exceeds this limit. It's a simple check that could save you from future financial inconvenience. Let's take a quick step back and talk about what the winter fuel payment actually is. This tax-free payment is normally paid once a year during the colder months to help older people pay for their heating bills. It has long been a lifeline for pensioners struggling with the cost of energy, especially with prices rising in recent years due to inflation and energy market instability. Historically, this support was provided universally to everyone above a certain age, regardless of income. That's what made it simple and predictable until now. And just to clarify, when we talk about income, we're not just referring to the state pension. The threshold includes all taxable income sources, occupational pensions, private pensions, investment income, rental income, and any other earnings that count toward your annual tax total. So, even if you're not earning a large salary, other streams of income can easily push you over the limit without you realizing it. Many pensioners may not even know they're over the £35,000 threshold, especially if they receive dividends or have savings interest accumulating each year. What makes this change especially tricky is the automatic nature of the repayment. The payment will come in, possibly giving pensioners the false impression that they've received free financial support. But months later, they may notice their tax code has changed, resulting in higher deductions from their monthly income, or worse, a lump sum adjustment during their tax return. That can lead to financial strain or budgeting issues, especially for people who assumed the money was theirs to spend. One important tip: if you do receive the payment and later realize your income was above the limit, don't panic. HMRC will recalculate your tax code and recover the funds gradually through pay, so it's not an immediate hit. But still, knowing ahead of time and opting out if needed is the better choice. And that leads to another concern: awareness. Many pensioners are not tech-savvy or may not be regularly checking HMRC updates online. Some don't use the internet at all. That makes it all the more critical for this message to reach as many people as possible, through community groups, family members, charities, and even local councils. If you know someone over 65 who may be affected, consider sharing this video with them, because missing the opt-out deadline could result in financial confusion in the future. Another question people might ask is, what happens if I forget to opt out? Can I just return the money? Unfortunately, it's not that simple. Once the payment is made, it is processed like any other taxable benefit. HMRC doesn't offer a return facility. The only way to avoid repayment is by preventing the payment in the first place, which is exactly why the September 15 deadline matters so much. This policy change also raises questions about fairness. Some critics argue that it punishes pensioners who have worked and saved throughout their lives, often modestly, and are now being treated as if they don't need help simply because their income crosses an arbitrary threshold. For example, someone earning £34,999 will get to keep the money, while someone earning just £36,000 will have it fully reclaimed. That sharp cut-off point may feel unfair, especially when many pensioners' financial situations are far from luxurious, even with that income. We should also mention that while this payment clawback applies to winter fuel payments, it may set a precedent for how future support schemes are handled. The government is moving toward more income-based assistance models, and this could be the beginning of a wider shift in how pensioner benefits are distributed. Let's recap the key points once more. All eligible pensioners will receive the winter fuel payment in late 2025. The amount is £200 for those under 80 and £300 for those over 80. If your total income is under £35,000, you keep the money, no strings attached. But if your income exceeds that threshold, the payment will be automatically recovered by HMRC through either pay or your self-assessment return. To avoid this recovery process entirely, you can opt out, but you must do so by September 15, 2025. So what should you do right now? First, check your income using HMRC's online tool. Then, if you expect to earn more than £35,000 this tax year, consider opting out of the winter fuel payment by contacting HMRC. Don't wait until it's too late. Also, share this information with friends or family who might be affected. Being proactive today could save you or someone you care about from unnecessary tax complications down the line. This announcement is a powerful reminder of just how important it is to stay informed, especially when it comes to your finances in retirement. Government policies are changing, and while many of these changes are aimed at improving efficiency, they can also introduce unexpected consequences if you're not prepared. If you found this update helpful, make sure to like the video, leave a comment to share your thoughts, and subscribe to my channel so you never miss important financial updates like this one. I cover everything from pensions and benefits to taxes and government support, all explained in plain English, without the jargon. Stay informed, stay ahead, and I'll see you in the next video.